Hey, hello everyone. This is Liz Faircloth. I'm one of the co-founders of the Investor community. I'm really excited to be joined by Brooke Beets from NREIG. You guys have been one of our very first sponsors. I don't know if you know that, Brooke.
No,
Back,
I do not.
yeah, about 4 years ago, we had a virtual summit, and you guys were one of our first sponsors of
Oh, I
anything
love
we ever did.
that.
So we appreciate that so much. I'm excited to have Brooke on, and such a wealth of knowledge what they're doing in the insurance space, and it's so important. But I'm excited about what you're going to be talking about today. So thank you for being here,
Yes,
and thank
absolutely.
you everyone for being here. Appreciate your time, appreciate your participation. I'd love to see in the chat box. We're a very engaged community,
Yep.
even through Zoom. So I'd love to see everyone share what your name is, where you're calling in from. And here's what I also want you to do. What is your intention for this webinar? The more laser focused we can get in terms of like, what do I want to get out of this? Whatever this is, the more we show up fully and the more we end up getting that. Because time is the most limited resource we have. And I don't know about you, but if I'm going to be on something and engage, I want to get the most out of it so I can make my time well spent.
Yes.
So, right, Brooke?
Yes, absolutely.
We're both from that cut from the same cloth. So I'd love to see in the chat your name, where you're calling in from, and what intention you have for today. And I just want to make sure sometimes people have a hard time with the chat box. I need a thumbs up in the chat box. Okay, here we go. It's working. So if I don't see anything, then I know something's wrong. Okay. Hey, Gina, looking for context and more information. Cool. South Carolina, North Carolina, and Georgia. All right, awesome. And then we're going to be talking about lots of geography. Hey, Katie, Arlington, you invest in Omaha, trying to understand why your insurance rates are going up so much. I'm sure Brooke can share some information about that. So let's put a pin in that, but I'd love to hear your question about that. Princeton, where do I invest and digest? Okay, well, now we're getting a bunch of people giving climate risk, impossible long-term population migration and depopulation, specifically Jacksonville and North Carolina. Great, insightful. These women are always amazing. I love our community. So great stuff. And if you're new to this community and new to this, like this is your first call where you're engaging with our community, please put new in the chat box. I just want to give you a special welcome. Just thank you so much for being here. So I'd love to see if anyone's new. Okay, you're new. All right, Caitlin, thank you for being here. Awesome. Caitlin, I'm going to be coming to Atlanta. There's a conference, FinCon in October. So maybe I'll see you there, but thanks for being here. All right, let's get going. We have a lot in store. I want to share a few slides with you about InvestHer for those on. And then I'm going to give the floor to Brooke and going to take us through everything here. So a little bit about our community. For those who are not familiar, we have a Facebook community that is for free. It's a free place that people are asking questions, getting support, really being there for one another, giving and getting. So I highly recommend get involved in the Facebook community. And, we want to help you and move you along your path. We also have meetups across the country. We have 50 meetups in the United States and Canada. These are local circles of women in various, geographical locations coming together and again, supporting each other on their path of investing. So definitely check out if we have one in your area. If we don't, we're going to be going through a really neat rebirth of our meetups. We're not doing anything with them. We're just going to be taking them to a whole new level, really adding more value to the women out in every geographical area. So stay tuned on that, but really excited about that. So if we don't have one, please consider starting one. We also have our EXP org. This is our team of real estate agents that are women that are also looking to invest and actually invest themselves versus just helping investors grow their portfolios. We have free webinars. We do these twice a month with great resources and great people like Brooke to share helpful information so you can move the needle on your path. If you haven't heard, we're already ready to roll for our next Investor Con, which is June 1st to 3rd in Orlando. This is it's a 3-day conference, 30 speakers, and it's really a place for women playing at the same level to really support each other, gain the knowledge, gain the skills, and obviously get the community that you need. And we're in community with each other. So it's a special conference, to check that out. This is a little QR code. This is our early bird price. So come engage with us. We're really excited about our next one already, even though I feel like we were just at the one in Austin. And then lastly, we have people are always asking, like, what do you have so many free resources. Do you offer anything that costs money? And we do have a mentorship program for women who are doing at least 5 to 10 deals. It's a mentorship program, very, very high level group of women, and it's application only. And it's a really, really special group of women, masterminding, supporting each other on their goals. So I just wanted to share that. Most people in our community aren't even aware that we have this, and we need to do a better job of sharing this resource with everyone, especially women growing their portfolio who are just tired of doing things themselves. So without further ado, here I have Brooke Beets. I'm excited to jump into really the topic we have today, right, Brooke? It's a very important one. People's insurance is going up.
Yep.
Deals are not penciling out. So the fact that the insurance is going up and deals aren't penciling out, and interest rates are the way they are, women are trying to make deals work, and this is a concern. So excited to have you here. I'm going to give you the floor, and if anyone has questions, I'm going to be back on to field them. Please put them in the Q&A box so I can appropriately field them. But we're here for you. Ask your questions. I always like to remind women, ask for what you need and want. So many times we don't do that enough in our lives, and we don't stand for that in the investor community. We request you to ask for what you need and want. So if a question pops up, put it in the Q&A box, get as much as you can from this session. We have a wonderful, wonderful resource here. So without further ado, Brooke, you have the floor here.
Wonderful. Thank you so much. Let me just share my screen, put together. Okay. Making sure. Sorry.
No problem.
Okay, I'm a very visual person, so I wanted to put maps and all kinds of stuff together for you. So good afternoon, everyone. My name is Brooke Beets. I'm the Chief Operating Officer at National Real Estate Insurance Group. Definitely looking forward to our conversation today. I know that Investor is a great opportunity, great community with many resources, and so I'm excited to share my knowledge and insights on ways that you can protect your assets. So just a little bit about me. I have worked in the insurance industry for just about 8 years. I've seen the market fluctuate rather drastically, and I've been keeping an eye on the real estate trends and how that is working and interchanging with the insurance industry. So when it comes to insurance, I know that sometimes it can be a necessary evil. It can be, frustrating and complicated, but the minute that you purchase a property, you're at risk. So it's extremely important that you understand your coverage options so that you can tailor them to align with your business strategy. I always say, all properties are different, not one size fits all. And so you could have 5 different properties in 5 different areas of the country and need 5 different policies for insurance. So today we're going to discuss the geographic risks and strategies to protect your assets so that you can be armed with the knowledge you need to grow your business profitably. So what I've done is I've broken down this discussion into 3 separate categories. So climate and weather patterns, investor-friendly versus tenant-friendly liability risks, and economic conditions. So let's jump right in. Natural disasters. Definitely probably the last thing on your mind when you're thinking about investing and in different parts of the country. But it is really important that you consider natural disasters. Just to put into context a little bit, natural disasters have increased significantly over the last 40 years. So in the 1980s, we saw about an average of 3 natural disasters per year. Fast forward to 2010, the 2010s, and we're seeing about 13 natural disasters in the United States per year, which is a pretty big increase in 40 years. several factors play into this, mostly climate change, but the frequency and the severity we are seeing year over year is just contributing to the cost of each of these events. And when that happens, we're seeing a lot of federal government spending, disaster relief efforts, consumer costs. The insurance carriers are then rating their risks differently, and all of this is tying into your insurance costs. This by no means is an exhaustive list of natural disasters, but I want to talk through a couple, like about 4 of these specifically that we see in the United States more commonly. So the first one, let's go to coastal properties and hurricanes. This is a hot topic right now. So coastal properties can absolutely be a fantastic investment, especially if you are in the short-term rental business space. So as we all know, in the last, couple of decades, online platforms like Airbnb and VRBO, they have really changed the landscape of the way that you as real estate investors are building your business and changing your strategy and growing your inventory. But coastal properties can sometimes be very risky investments. So taking a look back at some of the more devastating hurricanes that we've seen, like Sandy and Andrew and Katrina and Ian and Harvey, those all come to mind. These have been extremely destructive. And with that, millions of dollars in damage, government relief programs, we're seeing an influx of adjusters, just going to these areas, which are complicating matters. We're seeing high rebuild costs, carriers and even agencies are going insolvent. All of these things are related to why your insurance premiums may be going up. Even if you are not investing in coastal, it's all of these things that scatter throughout the country that increase premiums. So Beryl, the most recent hurricane that we saw, Beryl was the earliest Cat 5 on record and the first ever Cat 4 in June, which is wild to think that the severity of these is getting to where they're at. So what I want you to do is take a look at the map. And something that I want to point out that's very important and from an insurance perspective is that insurance carriers categorize different parts of the country into tiers. And so if you look on the map, you'll see the red, the orange, the yellow, that would be considered a tier 1 for an insurance carrier. With that, that is going to increase your premiums. It could change or limit the coverage that is provided. You need to pay special attention to your policy because that could change deductibles. Moving into the light blue and darker blue, that would be considered tier 2. And then up through the rest of the country, the gray area would be considered tier 3. So again, coastal properties can be very lucrative. They can be a wonderful investment business strategy, but make sure you completely understand what it is that you're getting into. Again, we're seeing impacts on premiums and deductibles. Some of the higher risk states, essentially all of the ones right there in red are, Florida, Louisiana, Texas, Mississippi, Alabama, the Carolinas, and Georgia. So from an insurance perspective, some mitigation strategies that I would like for you to always be thinking about is know your coverages. You're going to hear me say that several times today, know your coverages. This isn't just related to coastal properties or natural disasters. You always want to make sure, you guys work really hard to make these deals, and you want to make sure that you completely understand what it is that you're signing and what it is that you have to protect those assets. Something else I want to point out is named storm versus flood. So a named storm is any weather event that is named by the National Weather Service. So all of the ones that I just said, Katrina, Andrew, Ian. With named stormed, the coverages that are typically included are the high winds. What you will not see included with that is flood. Now, flood is considered an external water source. So think ocean, storm surge, rainwater, rising water. Named storm is completely different from flood. And if you are investing in any of the coastal properties, tier 1 or 2, you really, really, really want to consider having flood coverage as well. Couple other things. Secure doors, windows, and shutters. Again, this is just, if you're along the coast, whether or not there is a named storm coming, High winds are very prevalent in these areas. So things you want to consider to mitigate damage of your properties: trim the trees and the shrubs. This might seem kind of minor, but guys, I'm telling you, I've seen, keeping an eye on all of the claims that come through here at NREG, you would not believe how much damage can be done to a property from dead tree limbs or trees that are just not kept up. So keep that in mind. And then of course, always maintaining your roof and foundation, which that's for any property. So coastal properties, keep that in mind, all of these things to consider. Let's move to tornadoes. So you may not know this, but there has been a shift in Tornado Alley. Interestingly enough, it is going from Tornado Alley to what they are calling Dixie Alley. So up into the mid 80s, we saw, right there in the plain states in the middle of the country. But up until, mid 80s, 90s, all the way through now, we are seeing that shift to the southeast. So if you are someone who is, in the mid part of the country, this could be something that is increasing your insurance premiums. High winds, again, just like with the coastal properties, you are going to see insurance premiums increase. You're going to see perhaps different deductibles or limited coverage. The states that we are noticing this in are Louisiana, Arkansas, Oklahoma, Mississippi, Tennessee, and Georgia. So keep that in mind. Mitigation strategies, of course, know your coverages. Something to think about that I always like to remind people is if you know a storm is coming, and you have access to the property, or you have tenants in the property, make sure that they think about turning utilities off. If you come across a power surge, you could damage electronics, appliances, electrical wiring, breaker boxes, all of that kind of stuff. Just things to be thinking about. Trimming the trees and shrubs, and then avoid creating more flying objects. So I always like to point this out, because if you are someone who is investing and you like to do flip and fixes, and you're renovating, and you could have different, equipment, tools, machines, rented property on the location, you want to make sure that all of that stuff is secure in the area of high winds, tornadoes, things like that. Okay, let's move to wildfires. So we are noticing the landscape is changing quite a bit when it comes to wildfires. Again, if you take a look at the map, the northwest and western part of the country, this is really prevalent in right now. Coverages could be limited or excluded. So we're seeing this all over the place, where carriers are paying attention to where these wildfires are breaking out, and they are either limiting coverage, or they could just non-renew you altogether. We're seeing, again, an increase in frequency and severity in wildfires. One of the most devastating ones that we saw just last year was in Maui. That caused $5.5 billion in damage. And sometimes you don't really think about, it's in another state, it's in a completely different part of the country, but anytime there's a natural disaster that has the devastating effects, like the ones that we've talked about, that's going to flow into insurance premiums in all sorts of ways. So you're seeing, again, city, state, federal aid, disaster recovery, the adjusters, the influx of adjusters, the rebuild cost, consumer cost, all of that. From an insurance perspective, this is what the carriers are thinking about, which could in turn drive up your costs, is the proximity to the wildfire prone areas. And ways that they take this into consideration are like the likelihood of a fire, the intensity when it spreads. So just things you might not even think about, like hills versus flat land. Wildfire spreads over hills much quicker. Exposure to vegetation and debris. So embers and small flames contribute to the majority of how homes ignite. And so if you're in a highly, wooded area, or close to, forest or a lot of trees or a lot of dense greenery, that is very much so going to, spread the wildfire much quicker. So as we know, in this part of the country, there is a lot of beautiful landscape that is unfortunately more prevalent to wildfires. So something to think about, right? Hawaii, California, Alaska, Oregon, Washington, Arizona, Idaho, Texas, New Mexico, and Nevada. So mitigation strategies for you, of course, know your coverages, right? Absolutely no. Wildfire, fire is typically covered under your basic and special coverages, but we are now seeing, like I mentioned earlier, carriers are starting to put exclusions and deny some coverages in wildfire prone areas. So things to consider for the actual property itself is non-combustible construction. They make all kinds of things now that you can do to help mitigate, fire and keep it resistant. There's multi-pane windows, there's safety glass, you can invest in concrete, you can invest in fire resistant, siding and roofing and all of that. So things to consider if you are heavily investing in this part of the country.
For a quick question, right?
Yeah.
So it's interesting, and I don't know if the folks on here have also noticed this, right? So when you showed the first map and then the areas for flooding, right, there's a whole situation with the coastal. And then as you continue on with each map here, it's moving over, right? So you know where my question's going is what's, is there like first question, and is there a hierarchy, meaning the wildfires versus the coastal issues? Is there a hierarchy as investors can make strategic decisions, like, as they're considering a market, they know that, quite honestly, it doesn't look like any state is off limits here, but there's probably a ranking, like this is a 5 out of 10 in terms of increase in premium versus a 10 out of 10. Is there a way to look at this and kind of appropriately, order them, if you will?
Yeah, absolutely. So a little further down into my presentation.
I'm sorry. Am I jumping ahead?
No, all good. We get into that a little bit.
Okay,
But
great.
yeah, I mean, there's a million things you want to consider in each state.
Sure. Yeah.
But yes, that's
and
a
how
great.
to,
Yep.
cool. Thank you for that.
Yeah.
Okay.
Okay, so let's move on to the fourth disaster that I'm going to talk about, which are earthquakes. So the global rate of earthquakes has tripled over the last decade. So we're seeing a theme here, right? All of these natural disasters are increasing in frequency and severity. So earthquakes produce what is called shock, which is seismic waves. And this is typically the most damaging part of an earthquake. So it's a sudden jolt causing major damage. You can see on the map, the dark pink and orange areas are where earthquakes are most prevalent. Alaska, California, Hawaii, Washington, Oregon, Nevada, Utah, Tennessee, Arkansas, and South Carolina. One thing to consider when thinking about from an insurance perspective, earthquake or earth movement, those are not typically covered in your traditional insurance policy. So this is a coverage that you need to purchase separately. And if you're investing in these pink regions of the country, that could be very costly for you. But again, it's because the insurance carriers have weighed out the risk and they know how much it costs when a catastrophic event happens. And so they've planned for that. So again, mitigation strategies, know your coverages, secure water heaters. So I know you don't always know when an earthquake is coming, but I wanted to point this out because I don't know if people typically know that water heaters are typically connected to the water and the gas lines. So you always want to make sure that you have that top of mind and that you're, keeping those safe and secure. Proper storage of flammable substances. This, of course, just goes for any property that you own or rent out or are renovating. And then anchor heavy objects. So again, kind of going back to, properties that might be in renovation status, just making sure that equipment and all of that stuff is safe and secure. A couple other things to consider. I don't have a map to go along with this one, but I always want to point out that so your basic and special forms, and some of you might know it as basic, broad, and special. At NREIG, we just offer basic and special, but these are different coverage forms. The notable differences for special include theft, water, and weight of ice, sleet, or snow. So depending on where you're investing in the country, theft is something that you absolutely want to take into consideration. If you're investing in an area with a higher crime index, you want to invest in locks, security systems, good lighting. And note that the theft deductible could be different from your from AOP or all other perils deductible. So just things that could catch you in the event of a loss or a claim that you didn't know was part of the policy. Water. So water damage is different from flood, and water means an internal source. So think about locations or regions of the country that have deep freezes. If you have a deep freeze and a pipe bursts, this is something that you absolutely want to have coverage for. And then weight of ice, sleet, or snow, again, depending on where you are in the country. If you are investing heavily in the Northeast, this is definitely a coverage that you want to consider. Ancillary coverage options. So flood, we've talked about earthquake or earth movement, sewer drain and backup. If you are investing in, maybe older homes, or not even necessarily older homes, just any home, you want to make sure that you have coverage for that. Service lines is typically an additional coverage that you have to purchase. So I would say this one is more for older homes. The service lines that are running from the home to the street, you want to make sure you protect those. And then equipment breakdown is another example of an ancillary coverage that is not typically covered in your policy. AOP, which I mentioned, is all other perils, and a wind deductible schedule. So these could be different depending on the ancillary coverage, depending on the location and the region. Like I mentioned, theft could be different. So again, all things that you want to consider when getting insurance policies pertaining to, certain risks and geographic areas. The other thing I wanted to mention is what we're seeing now, especially with like the coastal properties and the wildfires, is that insurance could be completely inaccessible or just outright way too costly. So you definitely want to consider what your insurance premiums are going to be before you potentially make that investment. Okay, additional considerations. These aren't necessarily geographic risks or related to different regions of the country, but as an insurance professional, I feel like it is my duty to talk about these a little bit. So you want to make sure you're protecting your vacant and renovation properties. So these are higher risk and they are rated so. You will typically see that your insurance premiums are higher for these. Again, you want to make sure that you have locks, security systems, regular visits. If you are not physically in the city or the state where you are investing, you want to make sure that you have, a property manager or someone checking on the property regularly so that you're aware of any incidents that may occur. Keep the property well maintained. This is kind of a no-brainer, but I always like to say it. Insurance is not a maintenance plan, and I always like to point that out because as the real estate investor, it is, your responsibility to make sure that the property is kept up well, that you have, liability coverage. You don't want to ever have to rely on insurance to maintain your property. You absolutely want to avoid liability exposures. So you never, ever, ever want to go without liability coverage. This is coverage for the unknown. If you have tenants, your tenants might have guests, the guests might have guests, you just have no idea what could be going on in the property. And so you absolutely want to make sure that you're covered from any incidents. Think slip and falls can occur when handrails are unsturdy, uneven stairs, flooring, sidewalks. You do not want to get yourself into a frivolous lawsuit over some minor liability claim. Dog bites. Dog bites to consider. Different cities and counties have certain breed restrictions. And so if this potentially happens on your property, you could potentially not be covered for it. And then attractive nuisance. So these are considered like pools, trampolines, hot tubs, any play equipment. If you have these on your property, be very, very, very careful. And also just know that insurance companies might not cover them. So if there's an incident that occurs on one of these, you might not have coverage for it. Wear and tear is not included on almost all policies. So keep that in mind. And then lending requirements. Make sure that you know what it is that your lenders are asking for and requiring before you close the deal. Okay, it's my little bit on insurance. Back to geographic risk. So each state, sorry, let me move my bar here. Okay, each state has specific rules and regulations concerning rental properties. So I broke these down into, like, think about legislative considerations, landlord friendly versus tenant friendly. Please keep in mind that when I say landlord friendly, that does not mean that the tenants are mistreated. It really just means that the landlords have a broader authority to properly manage their rentals. So let's dive into this a little bit. So we'll start with landlord friendly, less complicated eviction process. Eviction laws outline lease violations, which can determine rental agreements. So if you ever find yourself in a situation where you have a tenant and perhaps it is not working out and you would like to get rid of them, you would like to evict them, you may not have full control over your contract. So you always want to make sure that you know what the local laws are for tenants. No rent control. So rent control, is how and when you increase the rent. If you are living or if you are investing in a city that is, booming, the economy is booming, the cost of living is going up, everything is getting more expensive, you want to offset that cost by increasing your rent. In some states, you do not have control over how much you can increase your rent. Low property taxes. Of course, this is fantastic for all of us. We always want to make sure that, we're keeping an eye on the property taxes and really thinking about the bottom line when investing. No deposit limits. So some states limit the amount that landlords can collect for security deposits. Think about this as, so a couple of things. So you could be limited to the time that you have to return your deposit. So let's say, they move in, they hand you a deposit, they move out. You want to make sure that you have adequate time to inspect the property for tenant damage before returning the deposit. And in some states, you're only given, a few days or a couple of weeks to do that. Tenant screenings. You want to make sure that if this is something that is important to you, that you are living in a state or a city where this is applicable. Liability risks. We talked about it a little bit, but you don't want to find yourself in a situation of an incident or an accident on your property, because some of these states have favor the tenant. So if you get yourself in a situation like this and it's resulting in a lawsuit, you want to make sure that you are in a state that's a little bit more landlord friendly. What we've noticed for these states: Alabama, Arizona, Colorado, Florida, Georgia, and Texas. So moving over to tenant friendly, strict laws on leases. Or strict landlord requirements. So strict laws on lease terms, late fees, legal compliance, all of those things can give you a major, major headache if you're not in tune with what the local laws and regs are. Strong repair policies. So this could potentially dictate what the landlord's responsibility is for maintaining and repairing. This could go all the way down to the smallest repair. And so if this is something that is not worth your time or in your budget, you want to make sure that this is also not part of your, business strategy. Longer periods for termination notice. I have seen that you may not be able to comply with, or I'm sorry, you may have to comply with longer periods, meaning if you decide again that you want to part ways with a tenant, you could potentially be required to give them 30, 60, or 90 days. And if you're in a situation where it's not working out for either one of you, the last thing you want to do is let them be there for 90 days. Extended payment periods, again, typically rent is due on the 1st or the 5th of every month. What I have seen is that in some tenant-friendly states, tenants have up to, 14 days to make rental payment. And if that's just not in your financial plans, then that might be something to consider. So most friendly for tenants, we have seen Massachusetts? Yeah. Connecticut, Rhode Island, Minnesota, Iowa, and Nebraska. So many things to consider when investing in properties that you are renting to tenants. Okay, let's keep moving. The economy. So this is a big one right now. We are in the most difficult property market in the history of property insurance. We are seeing a very, very hard market right now, which is making it difficult for everybody. So all of these factors contribute to the cost of insurance and the cost of investing. So inflation, we've seen rates have been rising steadily. The cost of goods and services drive up business costs. In turn, you're going to see your insurance carriers spending more money or putting out more money to help in the event of a claim or a loss, because their costs are going to be more expensive. Interest rates are rising, hopefully steadying off and potentially going down by the end of the year. I don't know that I have seen much that indicates that right now. Labor shortages and increased building costs to me kind of go hand in hand a little bit. So we're seeing that construction costs have surged. The shortage of skilled labor. This causes businesses to offer higher wages, which increases project costs, which increases your spend. Supply shortages. So there's delays, there's property repairs that become more expensive. It's requiring carriers to pay more when the loss occurs. So it's all of this vicious cycle that feeds into the insurance premiums going up. The states that are super prevalent for economic conditions right now is Florida. So really since Hurricane Andrew in 1992, which was a $27 billion damage hurricane, the Florida market has been very challenging. The average premium is $6,000 a year versus $1,700 for the rest of the country. And you also need to consider flood when you're in Florida. So that's going to hike it up even more. The claims process, adjusters, long wait times, delayed settlements, all of these things is why it makes Florida a more risky place to invest right now. California, we're seeing carriers completely pull out of the Florida market, and other states as well, which I'll talk to in a minute. But the market challenges we've seen are due to wildfires, to property values, which are just, outrageous. There are also stricter regulatory requirements and insurance ratings. So all of that is feeding into those two states specifically. From a carrier perspective, there's a global impact, or the global impact of COVID, foreign wars, the state of the market. All of this is driving up premiums and reinsurance costs. They're limiting capacity, exiting states. We're seeing Florida, Texas, Oklahoma, Louisiana. Those are some of the markets right now that carriers are just like, not going to do it. It's just not worth the risk for us. We're also seeing that carriers are changing their business strategy. So the carriers are reevaluating what makes the most sense for them from a business perspective. And this is what's really hardening the market. And then you think about the actuaries and the underwriters that are, kind of steering the ship for the insurance carriers. They determine who to cover and how much to cover it for. So they're analyzing potential risks and probability, and they're constantly reevaluating the market and adjusting rates based on the current conditions. So that's why we're seeing, the influx and all of the different markets just kind of in a tailspin right now, because there's so many risks to consider. Okay, I'm trying to go fast.
Quick question, Brooke, and then we got two Q&As, and then we'll would love for you to. This is very fascinating. Is there a place that that investors can kind of stay updated with the updates that you guys are getting in terms of like places more riskier, risk tolerance? Is there like a hub for that, if you will?
Man. I rely pretty heavily on, Insurance Journal, some of the bigger names in the business that talk about this kind of stuff. I do a lot of Googling. I do a lot of just searching myself. We
Okay.
also get a lot of guidance from the carriers, from our carriers that we work with, saying we are, we aren't, and this is why. But as far as one centralized hub, I don't have a suggestion for that. But
Could it also, Brooke, be something that the women that are considering properties for purchase run by you guys and say, hey, I'm considering this. This is what they're quoting me. Is that still accurate in this environment? Is that a
oh,
is that
absolutely. We would
yeah.
be happy to do that.
Yeah.
Absolutely.
Okay,
Yeah.
cool.
Yeah. So let's move into market trends, real estate. Trends impacting your industry. So we're seeing massive population growth in what is called the Sun Belt. So this is a huge opportunity for real estate investors. Specifically, so in addition to attracting like the retired generation, it's also becoming increasingly more attractive for the younger professionals. So you're going to see lower taxes, more affordable housing prices and rent. The Sunbelt cities really offer more space. There's a vaster space as compared to cities like, New York and Chicago and Boston and Philadelphia. Which, people are really enjoying right now. The growing relocation and the rising population have really bolstered the real estate market in this region. And then growth has not been limited to just single family homes. So we've noticed that it's also being translated into multifamily and commercial real estate as well. What's driving this? Mostly the pandemic, really kind of forced people to think about where they were living and if their situations were working out for them. And so what we have seen is that a migration towards the Sun Belt. 80% of the country's population lives there. Or I'm sorry, 50% of the national population, which is about 355 million. And we have seen an 80% population growth in, the last several years. So good place to invest. But again, keep in mind all of those maps that we already looked at in some of those other states. So there's kind of the trade-off, right? It's a great place to invest, but you have to make sure you're paying attention to natural disasters and all the other things that are involved with that. Continued market trends for you all, the real estate investors. So things to consider when investing. So housing inventory. How many houses are available? Right? You don't want to get caught in a war of driving up the prices just to purchase something. Property taxes, how do those look? The cost of living, the average household income, the average monthly rent, year over year home value changes, and the vacancy rental rate. So these are all things that you should consider. You can see on the map. This is something that I found a few days ago that I thought was pretty interesting. All of these best and worst states are taking into consideration the factors on the left side of the screen. So again, some of the states that we have seen are fantastic to invest in, but also, can be higher cost of living and natural disasters. So from an insurance perspective, some low risk states for you to think about investing in is here, let me back up a little bit. So things that the insurance carriers are thinking about, or things that you should be thinking about, I guess I should say, are competitive insurance rates, the low occurrence of natural disasters, with my little asterisk for the Carolinas and Georgia. Low purchase price for the total insured value and the insured to value. So those are different things that you need to make sure you're considering and know the difference between. But the less expensive the house, the less it is going to cost to rebuild it. Potentially, the less your insurance premiums are going to be. So in these states, you are in Northwest, Southwest, and Southeast, some of the states that you should consider. And again, things to factor in are cost of living, average home price, the home appreciation, population growth, job opportunity, property tax rates, and available homes for sale. So this is what we have seen. This is where, as an insurance company, a lot of these states are where we're trying to grow, because the market is just, it's untapped, really, and it's a phenomenal place for real estate investors to be thinking about. Okay, so some of my final thoughts to sum this up. Keep an eye on the market and where you're investing. Local laws and regulations can be different in cities, states, counties. Protect your assets against weather-related events by implementing strategies to mitigate risk. So we talked about a lot of different things that you can do if you are in those specific regions and natural disasters are prevalent in your area. Know your coverages, right? Just make sure you don't get caught with anything that you are unaware of. You just don't want to get hit with a loss that you were unprepared for. Insurance is not a one-size-fits-all, so you can absolutely tailor the coverages that you need for your property. Read through the policy. If there's something you don't need, don't buy it. And then, yeah, just make sure you're tailoring the coverages to your needs.
Love it. And Brooke, before we I had two great questions, and please, everyone, throw some more questions in here. That you're so much great information. My wheels are turning. I don't know about everyone else's. Where can everyone learn more about you guys, get connected to you, Brooke? Because I think this day and age, how important it is to have a team member that you can really, you have a point of contact at this insurance company. One, to assess what you already have, but two, as you're strategically adding to it, they know things before you do. And that's the kind of people that team members that we often forget to really reach out to until we purchase the property. We're excited. And then we're like, insurance is triple than what I thought. And that will kill your cash flow. Kill it.
It's triple. And, like I said in the beginning, it can be complicated and frustrating. You might be paying for stuff that you don't need.
Yep.
You might have a lot of gaps and holes in your coverage. And again, it's going to be even more costly if you find yourself in a situation where you have a loss.
Yep.
And you're not covered. That could be devastating. That could wipe out your entire investment.
Wipe it out.
Yeah.
Brooke, do you mind also putting your contact information? Would that be okay in the chat box?
Oh, yeah, sure.
Okay. So it seems that most don't, let's run through a few of these questions. It seems like that most don't offer sewer, drain, and sewer line coverages. Is that right?
Yes, that is right. Yes.
Is there a reason for that?
It's just an extra ancillary coverage that you have to purchase.
Yeah.
Yeah.
Got it. I don't see your, okay, cool. I don't see your information in the chat box. So I'm just going to remind you. Oh, there it is. Cool. Are you seeing more investors and landlords carry liability coverage for only properties in high premium locations when they own the property outright? What added risks should tenants and the tenant's insurance carrier consider when writing the renter's insurance policy?
Oh, say that again?
Sure. Are you seeing more investors carry liability coverage only for properties in high premium locations when they own the property outright?
Okay. I don't know that I would say that this is a trend that I've seen an uptick in. And man, mostly because I would highly, highly, highly advise against that. You always want to have liability coverage. You have no idea what's going on the property. And liability is what could really sink you. A lawsuit, court costs. You don't want to get in the middle of that. So you want to make sure that you have liability. And honestly, A liability policy is not that expensive for the coverage that you get.
For the coverage you get. Yeah.
Yeah.
What added risks should the tenants and the tenant's insurance carrier consider when writing the renter's insurance policy?
Um, so we have a couple of options. So I like to talk to people about tenant protector plan. It's kind of like an alternative to alternative renters insurance. You want to make sure that you have coverage in case the tenant does any, unintentional damage. If they start a fire or if they have sewer drain or any water kind of losses, you want to make sure that you're covered for that. So
Okay.
keep that in mind because a lot of times intentional tenant damage is not covered.
Got it. Okay, great. Can you please address the Texas in more detail if possible? I'm not sure what that question means. Can you please?
So Texas is an interesting state because you could really break down. So the map that I showed you with the tiers and the coastal, you
Yeah.
could do the same thing for Texas alone. All along the coast of Texas, the risk for hurricanes and high winds is out of control. As you move up to, north through the state, the risk gets much, much less. So insurance carriers are taking that into consideration. They're thinking about wildfires. Yeah, it's just Texas is interesting. We're seeing capacity diminish quite a bit. And then carriers will come back and say, here you can have more and no, you have less. And
Sure.
so it's just really one of those states that it's pretty volatile and there's a lot going on, even, legislatively as well,
Yeah.
not just proper or not just climate.
Makes sense. So where can you purchase ancillary coverage from, like sewer and et cetera? I guess that's what we were talking about. So where can you purchase that type of coverage?
So any insurance agency should have that available for you. Just make sure you talk to your agent and know what is and is not covered in your policy, and then they can just add that on as an endorsement.
Okay, awesome. Can you walk us through an example of how we should be calculating how much dwelling and liability protection would we need for landlord insurance coverage?
Yeah. So typically, so like the total insured value is going to be the structure, the detached structure, contents, and loss of rents. So let's say you purchase a home for, I don't know, $150,000. You want to make sure that you have $150,000 worth of insurance coverage.
Makes sense.
Okay.
KD, we're going to do one more question and then have everybody. While I'm reading this question, I would love for everyone to share one thing they learn and one action they're going to take. Every time we do a webinar, every time we do anything in our community, what's your intention? Learn something, gain something, and then what did you learn? What are you going to do with this? Because we really, it's really important to take action. And I feel like the information you shared, Brooke, I'm part of a lot of webinars because I host them all. This was like really super, super, super valuable information. Like I personally have some action steps that I'm taking for my own investment goals. So what is something you learned? One thing you're going to take as an action? I would love to see that in the chat box by everybody. Katie, last question. I've seen a lot of higher quotes, 2 to 4 units and older properties. What can investors do to get the best rates on these properties?
Ooh-wee. So older properties carry a whole nother set of risks with them, right? Because they might not be up to code, which is of course going to drive in the premiums up if you can even get insurance on it. That's a good question. I guess really just make sure that the property is in the best condition possible. Of course, you need to know the area of the country or the area of the cities. There's little pockets.
Yep.
That are not quite as investor friendly. So just keeping an eye on location and the condition.
Yeah. And I also say, based on what I said earlier, if you have a subject property that you're looking to if you either own currently or you're looking to own, right? Float it by Brooke, float it by their team. I know you're the COO, but your team has been so super helpful. Everyone that I've connected with that, we're going to be doing more and more with you guys because you're so knowledgeable. And again, they have 3 steps ahead of you. They know the states that are going to be easier to write policies for because they're already dealing with it. So make sure you have, you know, have them part of your team or insurance carrier part of your team is huge. I
Yeah.
haven't seen all the learning and action steps. I need to see that from all of you. So let's see a few more and then I will let you go. And this will be right on our blog. So the recording will be access to everyone. Because I think this is just incredibly valuable. Look to invest in Minnesota.
So many good questions.
Katie, I agree with you. We're doing a new build there. I'm going to be sharing more about those details. Minnesota is very up and coming for a lot of different reasons. So I think you're onto something.
Yes, absolutely.
Brooke, thank you so much again. Really appreciate you guys being an ongoing partner of ours, and just thank you such helpful information. Really excited to have you here today. So thank you so much for all the information, wealth of knowledge, and just resources.
Absolutely. Thank you so much for having me.
Awesome. And please reach out to Brooke. Her team is also very active in our investor community. So you're going to see as people are asking questions and needs resources about insurance, we'll be tagging them as well to support to all of you. So thanks again for everyone for being on. Do something with what you learned. Brooke, thank you so much again.
Bye.
Bye, everybody.